Commodities, just taking a look at the week in review, and let's start out by taking a look at where some of the commodities closed for the week. December corn closed up, closed down about 9 cents, 8 3/4 cents at 3.40 1/4 in the December contract. Volatile week in beans, but beans closed just shy of 5 cents lower at 9.86 in the January contract. December wheat down a hair over 9 cents at 4.03 in the December contract. December cattle up $2.87 on the week at 105.60, and December hogs up just under $1.97 at 47.12, and that's in the December contract as well. At the time of this broadcast, crude's trading about $1 or so lower on the week, somewhere around that 43.20 area, and the dollar is strong, up almost 200 points on the week, right around a hair over 99 points, and that's actually pushing highs for a 9-month high. In fact, we did see a 9-month high at one point earlier in the day today, so some strength in the dollar against other foreign currencies. One of the main factors this week, or one of the big items this week in the corn and soybean market, was our monthly supply and demand report. Going into that report, we'll start out with corn. We were looking actually for a small reduction in supply, and we did not get that coming out of the report. We were looking for a small cut in bushels per acre. We were looking for 2.3 of a bushel cut. Last month we were at 173.5. The surprise was we actually seen a 1.9 bushel increase up to 175.3. We've seen some pressure in the futures because of that, and that gives us almost a 17 billion bushel supply out there. A very large supply. We did take some of our demand estimates up as well. We increased exports, we increased the feed demand as well. But with those increases and the increase in supply, we actually upped our carryout from last month, 2.32 billion bushels. We increased that to a little over 2.4 billion bushels. And then again, the trade was actually looking for a decrease there as well. So we've seen an increase in ending stocks. So we have a large supply. We also have a very large demand penciled in. And in fact, for this upcoming year, we are looking at a billion bushel increase in demand. So that is something we'll have to monitor in months ahead to see how those increases are coming into play. Taking a look at the soybean market, the trade was looking for a small increase in soybeans as well. Last month, the trade was looking at a 51.4 bushel increase, or excuse me, we're looking at a 51.4 bushel per acre from the USDA for soybeans. We upped that just a hair over a bushel at 52.5 bushels, and that came in a little bit stronger than what the trade expected. But it wasn't surprisingly, that did affect our ending stocks, and this is the one that caught the trade off guard. Not so much the bushels per acre, but the increase in ending stocks. So we were sitting at 395 last month. We were looking for an increase of 420 bushels an acre, but with the yield increase, we didn't see the demand increase push quite as hard. The USDA printed a 480 million bushel increase in the ending stocks. That's a parish number as well. Interesting, when we did see those numbers come across the screen, we did see some pressure on the market. Interesting enough, though, the initial sell down held for the most part. So a very volatile week in here, with us closing a little bit lower on the week, but we were able to actually make new highs in the week for beans. And a lot of that volume came in the overnight session, as we've seen some large volume in the overnight with ideas that maybe there was some inflationary play, some Chinese buying going on. But with the volatile week, and a lot of this volatility was due not only to the report this week, but the election as well, as we've seen the macro markets play out this week. but we were able to eke out new highs after the report, which was considered bearish by many, if not all, of the fundamentalists out there. But this morning, upon our break from 7:45 in the morning to 8:30, we've seen a big hard sell-off, and the rumor has it that the Chinese are cranking down on the speculation of those markets that caused the massive turnaround and sell-off in the soybean market, and actually took out some technical areas to the bottom side of the charts. It'll be interesting going into the Sunday night session what to expect there, if we're going to see some more follow-through from Chinese selling or not. Another thing to keep an eye on with these markets is specifically the soybean market is the Brazilian real versus the dollar currency. We're seeing the widest mark there since July and going back to March of last year. In other words, the dollar is increasing in value, the Brazilian real is decreasing in value. That makes South American products cheaper, more important in beans than corn. So we could see some exports leak that way due to the currency values. Exports this week were considered a little bit disappointing with the big numbers we've been seeing as well. Corn was lower than expected, still a good number, but lower than expected. Soybeans was a good number as well, around 30 million bushels, but the trade was looking for a 60 to 90 million bushel increase there. That's something we're going to have to keep an eye on in weeks ahead as well. And again, the volatility seems to be more so in the soybean market than the corn market. The corn market continues to grind lower. We did make weekly lows, and actually we made monthly lows in corn today as well. So we're seeing the pressure of that large carryout wear on corn. I think corn's probably stuck in a little bit of a grinding sideways trade at this point. Volatility is probably still out there in the soybeans, and I expect that to run its course through next week as well. Due to a lot of the outside markets, the volatility, the presidential election this week, the one thing to keep an eye on from this point farther, and probably the overall decider of the trend of this market, is going to be South American weather. Now, Brazil is ahead of their 5-year pace as far as getting soybeans planted. Argentina is behind at this point. The weather does look a little bit favorable as we sit here today, with a little more dryness in Argentina, a little bit more rain on the planted beans in Brazil, but December, January, February will be the main drivers of the weather market there for the South American crop. Taking a look at the livestock market this week, cattle was able to rebound well. Cattle futures 106 in the December contract continues to be the short-term resistance area that we need to pop this thing through to see a little bit more upside in cattle futures. Boxes are actually a little weaker on the week, run a little bit lower. The choice cutout closed a little bit lower today at the 185.33 area. And at the time of this broadcast, we've seen very little cash so far this week. Traded a little bit of light cash between the 102, 104 area, looking for probably something either late today, if not tomorrow, as far as the cash trade is concerned. That could be the driver beginning of next week. Hog futures actually were able to pop out, make 3-month highs here in the front end of the D-SPEB contracts. Cash markets actually made yearly lows today, so we're seeing the heavy pressure on the cash. Now, it's not falling out of bed, but it's still grinding lower at this point. The cutout firms up or is holding course, but the cash market continues to weaken. But there was a strong push taking out some moving day averages, and hog futures that may have propelled some strength there as well. We did see a little bit of a weaker close today, but we did pop that thing up before the weaker close to some new highs. And the trade's well aware of this, the large pork production or hog supply out there at the moment. Maybe that's factored in at this point, but I do think when you take a look at some of those deferred months in the June and July, you get anywhere close to $80, it would provide an excellent hedging opportunity for producers. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or you can check us out on the web at biscommodities.com.